What is up, guys, and welcome back to Trading with Prince. How are you guys doing? Okay, guys, today I'm going to show you a very simple but powerful method on how to trade VIX 75. Okay, yeah, we need to milk this beast, guys. We need to know how to achieve the best, and have lesser losses while trading VIX 75. So, one of the things I always talk about is everything depends on how you're looking at it and where you're looking at it from. So when it comes to trading, I always tell people in my Telegram group, I always tell people um online, and I also preach to people, my friends and people that trade, that the first thing you need to do most times when you are trading a pair, most especially VIX 75, is you need to go to the higher time frame and actually know what it's doing. From the higher time frame, you start coming down to the lower time frame based on your analysis, and you get a clearer view on how to attack the market, when to enter and when to come out of the market. Because if you go to the lower time frames and trade probably what's happening there, it will work, but it's good for you to actually know what's happening on the higher time frames before you start trading in the lower time frames. So let's go straight in, guys. Currently the market is ranging, as you can see that. Let's leave this ranging for now, and let's go and talk about what gave birth to this very crazy high here. Let's go and see how this whole thing happened and how we would have entered the market if we wanted to enter this market here. Okay, guys, so the first thing we would have done is to identify a break of structure. And what is the break of market structure? Break of market structure is what verifies the direction, the overall direction of that market. You understand, guys? What verifies the overall direction of that market. And from what we are seeing here, we had the first break of market structure here, at the break of market structure here. So if this is our break of market structure, guys, the next thing we are going to be looking out for is we're going to be looking for the point of entries. We're going to be looking for our point of entry, guys. So with that being said, what are we going to be looking for? We're going to be looking for order blocks. We're going to be looking for order blocks. If you don't know what order blocks are, click the card above to get the video on how to identify and trade order blocks in my page, in my channel. So yeah, we have to identify other blocks, guys. And in my previous videos I talked about how to identify fake or real other blocks, so you can also go and watch that one as well to know which other blocks to identify, because you're going to see a lot of other blocks, but most of them are going to be invalid, and you can know which is valid before you could even place an entry. So go and see that video. You're going to see the video of the cart above now. Okay, guys, so back to what we're talking about. This is an order block, as you can see. We're just trying to we're presuming that all these highs here doesn't exist, and we're trying to find out how it happened. So you're going to, one of the things I always say in my other videos is this: if you keep identifying other blocks, you have to wait for a retest of that other block. You don't just go and enter the market. You need to follow your rules. Remember, guys, you need to trade what you see. So let's keep moving. And because we know that this market here was on an uptrend, it was on an uptrend. What are we looking for? We're only looking for buys, guys. We're looking for buy opportunity, guys. So this was another order block here. This is another order block. As you can see, that didn't work. Why didn't it work? Because this other block was broken. If you see here, the other block here was broken. It broke out. So this is not valid. We go and look for another order block. This is not an order block. Why? Because you remember what an order block is. Let me just recap a little bit. Another block is the candle responsible for the swift movement of either highs or lows. So as you can see, we are looking for only buys here. So we're looking for a swift high movement. So basically this sorry guys, this other block, right, this block right here, first of all, it's not I think this is a doji or something. I don't even keep counts of candles anymore, because if you understand the fundamentals of how to trade ICT method, BTMM, and institutional trading, most of these things, you're not going to be looking out for what type of candle it is. You're just going to be looking out for your strategy, and it plays out all the time if you follow the rules. Okay guys, so first of all, this candle right here, let me see if I can zoom in a little bit. Okay, this candle right here is a bearish candle, but it's a bearish candle, but it's not strong. In my last two videos, I talked about identifying candles, identifying other blocks, and one of the things I said was you need to make sure that the candle responsible for that sweep move has a very strong body to wick ratio. That is one. Secondly, that the candle after it, which is meant to be either a bearish or bullish candle, but in this situation we are looking for highs, so that means that the candle after this bearish candle should be a bullish candle, should be higher than the previous candle. It should engulf the previous candle. This candle engulfed this candle. True fact, this one here engulfed this candle, but this candle doesn't have a solid body to wicks ratio. It's not even a major candle, so this is not an order block. So we keep moving, guys. We keep moving. Okay guys, look at this one. Look at this one here. All you need to do is just follow your strategy. If you follow your strategy, things are going to fall out right for you. So look at this candle here. Look at this candle here. Let me remove it so I'll explain. These two candles here, this is a higher time frame, guys, don't forget that. These two candles here now, these two candles, I'm gonna use the both of them as my order block. Why? Because first of all, this is a higher time frame. That is number one. Secondly, the both of them repeated itself again, so I could use it as my order block, my order block responsible for these highs. Now all I need to do, if I use that, and thirdly, we had a swift move. You can see this, we had a swift move. Don't forget, guys, this is H1. We haven't even gone down to the lower time frames. We are trying to, because in the lower time frames, this whole thing here is quite bigger. You're going to get a clearer view of what's happening, but we're trying to judge this based on the higher time frame. Then we go down to the lower time frame and see what's actually happening there. So this swift move was responsible for this swift move, so this could be called a valid order block. All we need to do is wait for the market to go up, retest this order block, and shoot up. So guys, as you can see, that was actually what played out here. And the safest take profit, my STP, my first STP would have been somewhere here, you know, guys. So you have to play safe depending on how much you have in your account. My second STP would have been this, because I know that the market is on a general this would have been my second STP. Then if you want to take it as far as you want to go, fine, but this is the safest. These are the safest two places to play the game, guys, because you know the market never ends, so you just need to know how to manage your lot size and play the game right, and yeah, make money. So guys, this part of it, I didn't want to talk about it because it's consolidations, but most times I just avoid consolidations. Not that I can't trade them, but I avoid them because consolidations are consolidations. But if you go on the lower time frame, you're going to see, even look at this, guys, it still played out very, very well here. Still played out. We basically had two other blocks here. We had this and we had this inside this place, and we went all the way up to here and went all the way up here. So I'm trying to see what we could do about this consolidation. A lot of people trade consolidations. Good, it's good. You can also have your other blocks from there, but you need to I would always advise you just let the market be. Okay, so when it's done forming its consolidation, you could go back, because if the market is done forming this consolidation, guys, the first thing you're going to see is this. It's going to break. It's going to break structure. It's going to break this structure all the way down here. This is going to be your first. This is going to be your first market verification. This is going to be your first market. When it breaks structure, the market could get here. When the market gets here, this is the first verification that the market is about to break structure. Then the second one is here, somewhere here, which is a major one. So if the market basically comes down here and breaks, you could now start looking for, you now know, okay, fine, I'm looking for only sales. The market is basically selling. So what am I looking for? I'm looking for sales. So I'm looking for the sources responsible for the flows that are going to go down. As I said, I explained all this in my video on other blogs, guys. So yeah, let's wrap this up. So basically that's it. The first thing you're going to look out for is the you go to the higher time frame, find out what the BOMS is, that's break of market structure is, identify your other blocks, wait for the retest of the breaker or the source, and enter the market. So that's it, guys. That's it, guys. Okay, guys, if you need to go to your charts and look out for all these things, make sure that what I'm saying is quite valid. Okay, so yeah, if you're still having confusions, you could send me a text, send me an email, or you could come to our Telegram group. Join our Telegram group. It's in the description below, and we get to talk. Okay, guys, have a nice day. Bye.